The Monetary Authority of Singapore has launched moves to develop AI in the finance industry and the network of digital assets. This includes future guidelines on AI risk management and drafting laws on a stablecoin regulatory regime. Nasyrah Rohim with more.
Here at the Singapore FinTech Festival are massive displays showing how AI can be used in finance, from customer service to fraud detection. But with these opportunities comes risks, which is why MAS is calling for feedback on new guidelines that set ground rules for the responsible use of AI in the sector. It's also launching a new handbook to detail best practices.
The guidelines and the handbook will work together. For example, the guidebook will require risk materiality assessments, while the handbook will provide examples of how such assessments are done. These two initiatives constitute our approach towards safe and responsible AI adoption.
Another big trend, converting real-world assets into their digital forms, known as tokenization. These tokens aren't just backed by currency anymore, but include bonds, funds, and even cash management. The question is whether there are enough safe and reliable options.
In the established financial system, everyday corporate and retail transactions are settled with commercial bank money. Holders of commercial bank money may convert to central bank money at par. Large value interbank transactions are settled with central bank money. This arrangement anchors the singleness of money and finality of settlement.
Mr. Chia said that unregulated stablecoins have shown serious weaknesses. The collapse of the Terra stablecoin in 2022 comes to mind. Its failure to maintain its peg wiped out nearly $500 billion in crypto market value and shook investor confidence. Conversely, regulated stablecoins are still nascent and, if not done properly, could very well undermine confidence in the tech. It's why MAS is preparing a new law to ensure stablecoins are properly backed and reliably redeemable. To grow this network of digital assets, MAS is partnering other central banks like those from Germany and Thailand to make cross-border financial transactions faster, cheaper, and more efficient.
Banks are welcoming the new guidelines and handbook, adding that it helps them better understand where the risks lie with AI adoption and how to manage them.
It's not just the banks, it includes the insurance as well as the asset managers. And of course, MAS, they are the regulators as well. So they bring a regulatory lens to this. So I think it's helpful for the banks to know exactly where and how we can sort of regulatory parameter where it is.
A lot of times, having examples of what has been done, what to consider, what are some of the things to watch out for is very useful for the financial services industry, because they can learn from each other and help accelerate the adoption of those principles and operationalization of those principles.
Another initiative aims to develop a voice-to-text model for the industry, which will be used to transcribe Singlish and other dialects. The Association of Banks says some members are interested in this tech as it can pull together data and capabilities from different sources to build new solutions.
Each bank is limited by the speech recording data it has, as well as its AI resources that may not be dedicated to this use case. So built-in AI will enable banks to combine their audio recordings and bring together AI expertise from across institutions with the best voice-to-text AI specialists from A-Star. This way, this complex challenge can be overcome to enable the building of a finely tuned model that can translate the everyday speech of Singaporeans.